Dynasty Wealth Investing is a social investing community specializing in finding companies that increase in value by 10 to 100-fold in 5 years or less. To this end, on rare occasions, Dynasty Wealth Investing will identify first-mover situations that provide an immediate opportunity to achieve superior investment results. Companies that are first movers have extraordinary investment potential. Returns in these situations could be as much as 100% the first year and could range between 1,000% to 10,000% over a 5-year period. The term first mover originated from a 1988 case study that was initiated by 2 professors at the Stanford University Business School. Today, most graduate business schools require their graduate students to take first mover courses. A first mover is defined as a company with the advantage of being the first to introduce a new product or service into a previously undiscovered market that has no competitors. In a brand new market, the first to put a stake in the ground is positioned to dominate. A UCLA's Anderson Business School study of the early evolution of Internet commerce characterized the last half of the decade ending in 2000 as a land grab, where firms rushed to establish market positions before competitors had the chance to do so. First movers are in the position to get instant billion-dollar valuations. UCLA's Anderson case study discovered that pioneer entrants such as Amazon, eBay, and Yahoo gained enormous market capitalizations, since investors anticipated that their early entry would result in large financial returns. eBay is a good example of a company that gained by being a first mover. In 12 months, eBay multiplied by 36 times its IPO price. Yet eBay only had 853 registered sellers when it filed for its IPO. Social media's first movers, LinkedIn, MySpace, Facebook, and Yelp, generated shareholder dynasty wealth over relatively short periods of time. $500,000 invested by Facebook's first investors in 2004 grew to $1.1 billion by 2010. That's dynasty wealth in just 6 years. Many first movers are awarded liquidity and billion-dollar valuations prior to their IPOs. Oculus, the developer of 3D virtual eyeglasses, was acquired by Facebook for $2 billion just 601 days after it was founded. 18 months before Lending Club's IPO at a $10 billion valuation, Google purchased $125 million worth of stock from existing shareholders at a $1.5 billion valuation. When a first mover's business model is positioned to disrupt large 100-year-old industries, their valuation can rapidly increase by billions of dollars. Between 2013 and 2014, the valuations of taxi and limousine disruptor Uber and hotel and bed and breakfast disruptor Airbnb and commercial bank disruptor Lending Club multiplied by 5 to 10 times. They all achieved double-digit billion-dollar valuations within 1 year. Dynasty Wealth Incorporated is a first mover. By pioneering the emerging social investing industry, the Dynasty Wealth model is disrupting the 100-year-old stock brokerage and investment banking industry and achieving exponential growth. To learn more about the emerging social investing industry, we suggest that you watch the 5-minute video titled The Social Investing Revolution. The sequel to the social media revolution has begun. The video is available at dynastywealth.com. Dynasty Wealth's investing community is focused on identifying first-mover investment opportunities for investor members. Dynasty Wealth has member companies that are first movers in renewable energy, the Internet of Things, social investing, crowdfunding infrastructure, cannabis infrastructure, online gaming, and smartphone applications. History will record the decade ending 2020 as the best ever for an investor to create dynasty wealth.